A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic turn of events, Japanese Prime Minister Shigeru Ishiba has vowed to remain in his leadership position despite his ruling Liberal Democratic Party, LDP, and its coalition partner Komeito losing their majority in the upper house during the recent elections. This election marks a significant moment in Japan's political history, as it is the first time since 1955 that the LDP has been unable to maintain a majority in at least one legislative body. Ishiba's campaign focused heavily on the theme of responsibility, emphasizing the need for the ruling party to prevent political stagnation and to fulfill its obligations to the public. In a news conference following the election results, Ishiba stated, "As the first party in parliament, we have to fulfill our responsibility with the public so as to prevent politics from stagnating or drifting away." Ishiba's determination to cling to leadership comes amid ongoing negotiations with the United States regarding the contentious 25% tariffs imposed by the Trump administration. The Prime Minister expressed no intention of stepping down, citing the complex economic and security landscape that Japan currently faces. The political uncertainty following the election has led to fluctuations in the financial markets, with the Japanese yen strengthening against the dollar as investors reacted to the news. On Monday, the yen gained more than 1%, trading at 147.29 against the greenback, marking its best day in 2 months. The stock and bond markets remained closed for a national holiday, making currency movements a focal point for investors. Analysts noted that the political landscape has contributed to a bearish sentiment towards the yen in recent weeks, as hedge funds had begun to position themselves for a potential setback for Ishiba's coalition. Akira Moroga, a chief market strategist at Azora Bank, remarked, "Some investors had positioned for a larger setback for the coalition and even anticipated Ishiba's resignation." However, the initial rebound of the yen was attributed to the unwinding of these bearish positions and relief that a political risk event had passed. The outlook for the yen remains cautious, with expectations of trading within a range of 145 to 150 this week. Nomura has projected further gains for the currency, predicting a rise to 142 per dollar by the end of October. As Japan navigates this period of political uncertainty, Ishiba will need to seek support from opposition parties to govern effectively. Rodrigo Cattrall, a currency strategist at National Australia Bank, noted that such uncertainty often favors the yen in the short term. The election results have raised concerns about potential government spending and tax cuts, which could further impact the yen and Japanese government bond yields. The volatility in the yen has been exacerbated by ongoing trade tensions, particularly following President Trump's tariff announcements. As Japan faces an upcoming tariff deadline on August 1st, negotiations with the US have made little progress, keeping investors on edge. Goldman Sachs strategists have highlighted the attractiveness of yen options as a hedge in the current environment, especially following the recent election risk. With the political landscape shifting and trade discussions looming, all eyes will be on Ishiba's ability to navigate this new reality and the implications it will have for Japan's economy and currency in the coming months. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.